Okay, welcome everyone to Thursday Night PUG Group. This is a users group to define and answer questions on what this system is and what everything represents on the charts. First and foremost, we have several questions that we're going to go through tonight that were sent in. The first one was, let's discuss defining what the horizontal bars are. So let's take a look at the intraday chart. This is GLD. Last week we did cover both not the system but went through a extensive market analysis as well about gold and defining what the potential is for the week, especially since we were setting ourselves up for a potential high close doji. In fact, as you are probably aware today, gold up almost 2%. We did generate on Friday an official bona fide high close doji. That was apparent by the gold bar, which is colored here. Blue bars, blue candles, signify a doji. Orange signify a close, so that it is confirmed that it's above the high of the dojis within a specific time frame, thus generating the both visual as well as what would be picked up on our scans as the official high close doji. So in essence, what are we looking at when we see these horizontal bars, the person's pivots? What do they really represent? Jeff had asked me to cover that tonight. He said he had a bunch of questions. And in fact, Jeff wasn't quite sure. And so we went through this afternoon on a few things. And so let me go through with you exactly what we are all looking at the same time. So I'm going to also start a second recording just to be safe and sound, and we are all set to go. So first off, let's define what a bar is, or what the horizontal bars represent. Many of you may not be day trading, but maybe you're swing trading. And if you're swing trading, what we may want to look at is, what the outlook is for the week. I generally like to line up my charts, as we talked about last week, intraday charts such as a 5, a 15, and a 60. I like to have lined up with daily pivots. Typically, I might cheat and take the 60-minute and also include the weekly pivots. This is a daily chart, and as you can see, if we have a daily chart and you can count out approximately, it's maybe hard to see, so let me expand this out. You will see that we have 1, 2, 3, 4, 5 dots extended out. You can assume that these are weekly pivots. So if this is a daily chart and you got the dots going across, you know it's a weekly pivot. All right, so what are the horizontal lines that we're looking at? What do they represent? All right, so let me expand it up here. First and foremost, let's take a look at what makes the engine run this person's pivots. The blue. What does the blue line represent? Again, the blue line represents the value from the prior week. So this was last Friday to Monday. So if you go Monday, Tuesday, Wednesday, Thursday, Friday. So this is 1 week, okay? This is 1 week. If we took the value of the low for the week, the value for the high for the week, and the close for the week, those are the 3 points of interest on the chart. The high, the low, and the close. If you add those 3 points up, add those valuations up, divide by 3, you're going to get, for the next time frame, pivot. And blue, this blue is the weekly fair value pivot. This is the high, the low, and the close of the prior week's value extended out into the future. So on Friday, when the market closes, we know what the blue line is going to be. All right, so there's where we get the blue line. Next, there's an olive color. It might be a little difficult to see on different screens, but the olive, or it's supposed to be gold, which is here at 105.34. Remember, what we're looking at here is GLD. What does that number represent? That seems to be a big mystery for some. Now, TradeStation, we have it on our platform here. Genesis, we have it on that platform. But this gold line is not calibrated or visible. It is calibrated, but it's not visible on Thinkorswim. That gold line is very important. It is the pivot point moving average. It's the average of the past prior 3 period pivots. In other words, this gold line right there, if we took the value of the current pivot, the prior pivot, and the prior pivot, blue lines. So the typical value, or the median price, or the high-low close divided by 3 of the last 3 time frames. Okay, remember, this pivot was based on this week, this pivot was based on this week, and this pivot was based on that week's action. Okay, since this is a weekly pivot, we're going back 3 weeks, right? So what is the typical value for the last 3 weeks? And that's pretty much in a weekly pivot, which is what we're looking at. That's what this gold line represents. When the 1 period pivot is above the 3 period, just like moving averages. When a short-term moving average is above a longer-term moving average, and the moving averages are pointing up, the market's deemed to be bullish. So tonight's PUG group gives us the identification, no matter what time frame you're using. If it's day trading and you have a daily pivot, then it's a 3-day pivot. If it's a weekly pivot point analysis you're looking at, then the blue-gold relationship is based off the gold is based off the last 3 weeks pivots. Monthly, 3 months, quarterly, 3 quarters. All right, so when the blue is above the gold, the market is deemed to be in a bullish conditions. So what have we done to help us design that the market's bullish? Well, it targets a higher valuation red, which is R2, and a higher supporting value, which is S1. That's really what it is. But sometimes markets might not adhere exactly to the range that we've predicted, but it does conform to giving us an idea that the market is in a bullish mode. We flipped from last week from bearish to this week bullish. And of course, GLD responded in kind. Now, if you are identifying 2 things, let me turn this off real quick. Format analysis technique. And let me turn off the status. We're going to turn off the triggers. And we're going to turn off the sentiment. And now all we're left with is just the candles and the weekly pivots. All right. So as you can see, there's no triggers, there's no moving averages, it's just the candles and the weekly pivots. So going back in time, and this is what's the beautiful thing about the pivots and the person's pivots, more importantly, beautiful thing is you can visually backtest this. As you can see, this week from the prior Friday, it was calculated, it said, hey, for the next week out, blue is above gold, the market's bullish. And all of a sudden the market opened and it came down and it started to trade below support. And then at the end of the week, at the end of Friday, it said, hey, guess what, man? Market conditions changed. Look, blue below gold. We're going to be bearish. The prior week, it said, oh, you think you want to buy gold? Wait a minute, guys. Blue is below gold. 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 Blue is just slightly below gold. As you can see, it's still bearish, but the market ripped. And then finally, we got a changeover, blue above gold. So we had a market that went from identifying in the last 1, 2, 3, 4, 5, 6, 7, 8, 9 periods, literally out of those 9, 1 week was wrong. 1 week was wrong right here. So that's not bad shooting for helping us to identify the technical market condition of the market. Now, that's one tool. Let me go back, and we're going to format analysis technique. And now I'm going to turn on the sentiment, and I'm going to turn on the triggers. The sentiment is the moving averages, and the triggers are just the arrows, okay? And I'm going to turn off the pivots just for a minute and make sure everything is all set. So notice that we now have a different system. Now, most people don't realize this. They think it's both one and the same, and it's really not. While we did get a high close doji at this juncture, and we did get a buy signal, 1 bar later, 2 bars later, it flips right back into a sell system or a sell mode. So if you're sitting here thinking, hey, I've got a sell signal, how do the weekly pivots? What's the weekly technical outlook from a second non-correlated indicator? Because the weekly pivots have nothing to do with the buy and the sell indicator. Isn't that very useful? You have one indicator that helps confirm another indicator. If the person's pivots are identifying due to that blue-gold relationship bearish and you get a sell signal, the odds favor the fact that your market is going to be headed in a downtrend. And we actually get into a downtrend for the majority of this, 8-week, 7-week time period. Well, finally, we get into a daily buy mode. And then what happened is that the market started to go up. And then as of Friday, the market projected a weekly person's pivot bullish mode. So how to use this successfully is to enhance confirmation from 2 different types of methodologies. We have a daily PPS indicator, daily arrows that is, with a weekly pivot indicator. When they are in sync, you all have another way of confirming that the market or the price action might be, when both are in a bullish bias, you have a higher probability to look for buy setups rather than bearish setups. So I wanted to go over again and share with you what exactly is this indicator trying to tell us, and more importantly, what is it based off of. So the blue, when relationship is above gold, it says, gang, whoa, hold up. The market's turned from bearish to bullish. And then, of course, we already had a PPS buy signal. The weekly pivots are saying, guess what? If you think the market's in a bullish bias, the weekly pivots are saying, yes, they are. Blue is above gold. All right, now, I hope we're clear on the blue and gold relationship. Now, what's with the red lines? If you note here, we have 1 blue, we have 1 gold, and we had 1 green. But we have yet two red lines. So I use double arrows. Now I use triple arrows. There we go. We have 2 red lines. One's highlighted and is really dark, and one's very thinly noted. That's when the market is giving us a blue above gold, a bullish bias. What we decided to do, that sometimes the market might be bullish and give us a projection of a higher high and a higher low than the preceding time period. We have a higher red and a higher green than we did here. Everyone can see that, thus giving us a projection of what? A bullish trend developing, higher high, higher low. But it did that Friday for this coming week. So it gave us a forward projection of what the market condition is and what the upside is. Now, what we decided to do in a bullish environment, my teachings, when I give a seminar, if you've ever gone through my course materials, in a bullish environment, we choose S1, R2. Sometimes the market doesn't quite get to that R2, so we just kind of put in the R1 pivot. So we have both of the resistance, but the one we think, because it's really bullish, is heavily highlighted. That's the difference. Now, this was something when Jeff and I were talking, he suggested, I share in seminars, and I found an old, when I say old, you guys might enjoy this. I found an old pivot point. How old is this? This was created in, as you can see here, this particular one. I found another one was 02, but this one was created in November of 2003, 12 years ago. So while some people try to create new indicators and say, hey, I've got something new, and the funny thing is, if it works and if it will stand the test of time, why do you need a new indicator, right? So let me just share with you a couple little things. If it's in, I think we got the right one here. I could be wrong. Let me double check. Double check this one here. File, when was this one created? I think this would have been the one. I'm not sure. This was created in 2002. Boy, I was searching for so many different presentations showing Jeff, this is the kind of stuff that we had for so long, and he goes, that would be nice to share with the audience if you had an older presentation, just to kind of say, hey, by the way, we haven't really wavered in our stuff. So this is one that I did in 04, but the actual creation, I think this one was created May of 02, so maybe this was one too. And it described what I was teaching back then to traders, and this goes back a long time. So hopefully you can see what we've got for the support and the resistance. And this is what I wanted to share with you, this one particular slide, okay? Note what it says. In an extremely bullish market condition, the pivot point, which is the blue line, or the typical price, which is created by the high, the low, and the close divided by 3, it can become the target low for that trading session. So, this is out of the archive from literally, 12, 13 years ago. This is kind of stuff that, comes out of the archive. And in fact, in a extremely bearish market condition, the actual pivot point will act as the target high for that session. So in other words, folks, in an extremely bullish market condition, if the market's truly going to be, if the market's supposed to go down and be bearish, if the pivot blue line holds, the market, that's a bullish market environment. That's a really keen takeaway for tonight's session in understanding what the pivots are. Think of what that slide just said. In an extremely bullish market condition, the pivot, high-low close divided by 3 for that trading session. Notice how I defined a trading session. I didn't say the daily pivot for day traders. I didn't say the weekly pivot for swing traders. I didn't say the monthly or the quarterly pivot for longer term traders. I said trading session, which means whatever the time frame, the pivot point that you're looking at for the time frame you're looking to trade. So this is a weekly pivot. It would be applicable for this current week. If the market's truly bullish or in an extremely bullish market condition, the pivot point, the high, the low, the close divided by 3 will be the blue line. And in an extremely bullish market condition, the blue line will be the target low for that time frame. The inverse is true. In an extremely bearish market condition, the blue line, not the red, but the blue line will be the extreme or at least the resistance for that time frame. All right, the blue line. So the pivot point is very important in utilizing both trading, understanding what the market condition is, and I'm so glad that we had that question addressed of what is on our charts. It's also something that I've been teaching for a very long time. How long? Over 2 decades. In fact, here I'll even share this with you. This was something that was copywritten back in 1999. I used this when I owned a brokerage firm. I actually had to register this Excel spreadsheet with the National Futures Association because it was given to the public I was giving this to my brokers when I owned a brokerage firm. And basically what you see on this Excel, and I've written about this in several books, is that was the pivot. The market direction number was the gold line. Pivot was the blue line. Market direction was the gold line. When the pivot point was above the gold line, when the pivot value, which in this example, 1176 for the S&P 500, 1176 is above 1149. And if that's the case, then that would mean that blue was above gold. Blue was above gold. If that's the case, the market's bullish. And then Excel we had it programmed so that we would see that the market direction and the market is bullish. And if the market is bullish, I targeted what the high and the low was. The low, S1, the high, R2. This is how long I've had and been doing this. Now we copywrote this, but this I'd actually been doing by hand even before then for over 25 years. So this is a methodology that was first put in by hand, then it was put in, thank God, by Excel spreadsheet, and then finally in a trading system via computers, which you guys are looking at. So it's not something that's new. It's something that's been around a very long time, and it's as effective then and powerful now as and something that is extremely useful in all facets of the markets. So, we talk about choosing the correct support and resistance point. So if you take a trading course of mine, or if you come to mentoring or a seminar, we would come through and teach exactly what these lines represent. In a bullish market, we selected R2, the pivot point, and S1, okay? And that would give us a target of a higher high, higher low. Higher high, higher low. So if we use that high and that low and that close for the next time frame, this was what the formula would calibrate. It would calibrate a higher high and a higher low than that current bar, right? So if the market's truly bullish, instead of the market opening a little lower, trading all the way to S1 and then zinging straight up, sometimes the market just opens a little lower, gets to the pivot point, and then goes up in an extremely bullish market environment. And then the opposite would have been true in an extremely bearish market environment. So in an extremely bearish market environment, the pivot point would act as resistance. Sometimes you see in downtrends, when markets are, in decline, sometimes we would see the market maybe open a little higher, trade around, suck in some longs, and then straight back down. And what we would look for is if the market was still bearish, typically noting that the market would hover around the pivot point, maybe we'd get up to R1. But if the market is deemed to be bearish, we should see a lower high and a lower low and look for a continuation of a trend to the downside. So I thought it would be interesting. I think, Jeff suggested, hey, That'd be kind of neat. Show the audience how long you've been teaching this, that this is not something new, and yet the teaching of that pivot point, and especially I hope you appreciate that observation was not something new. Again, I'm gonna share that slide with you one more time because I want it ingrained in your mind that typically in an extremely bullish market condition, the pivot point, which is again high-low close divided by 3, can become the target low for that trading session. So we focus in on the pivot. Now, early in the time frame, so if we're in a week in a market like Monday trades a little lower, Tuesday trades a little lower, and all of a sudden it starts to rally off that pivot early in the week, it might give you the indication that we could trade up to resistance by later in the week. So I always found weekly pivots for swing trading extremely effective, using the weekly pivots extremely effective for identifying the blue-gold relationship. Now, during football season, I call it the Notre Dame effect, all right? Blue and gold for Notre Dame. And some people, when I go out to California and I'm in USC territory, I have to say the Bruins, I can't say Notre Dame. I have to say you just can't talk to these people about Notre Dame out there. So we call it different things. But typically here, when we were in Chicago, it was the blue-gold relationship, and it was considered the Notre Dame relationship. So any event, not to beleaguer on any type of humor, since we are coming upon football season, that is what these lines represent, whether you're looking at GLD or whether we're looking at, for example, gold. So here's an interesting concept. Whether it's an interest rate, a bond fund, as long as it has a range, this methodology can work. This is the difference between gold and GLD, which obviously gold has less holes in it because it trades literally 23 hours a night, 5 days a week, right? Gold GLD doesn't trade overnight. But I always teach people, if you're trading in a commodity-based ETF, typically we would look at the price direction of the underlying commodity relative than just paying attention to the ETF. The same can be said with, like, for example, when we're looking at the euro currency. So I'm not sure that many of you might not be currency traders, but the example I'm about to give is very relevant with euro currency, how it defines blue below gold, and this might be a bad example based on the fact that the euro currency is kind of similar in trading as its dollar, the opposite of the dollar. It's the euro versus the dollar, and gold is kind of, does the opposite of the dollar and kind of moves and has moved in sync in the intermarket relationship with euro. But I wanted to give the difference between the euro currency and, again, the exchange traded fund, FXE. So a lot of stock traders trade, and I can't get rid of this little ghost image unless I shut down. It's a trade station, not a person indicator package problem. That is a trade station issue. But if we could just work through that 15-minute box ghost for this session, that'll be great. So in looking at the FXE, while we have, you can see hole, it's just Gap City, right? Well, what we can do to look for, it's not that the indicators won't work, it's just kind of hard to see the trade and the trend for some traders. To work through that, just all you have to do is look at the underlying, or know what the underlying symbol is, and here's the euro currency. It's just the @ sign EC, and you're trading the euro, or you're tracking the euro futures. So you can track the futures. So you can track the futures but trade the ETF. My advice is to look at both, because sometimes we get setups and signals in the ETF that because of the algorithms or the price action won't manifest in the futures, and sometimes vice versa. Case in point would be the E-mini S&P futures versus the SPDR ETF, or the NASDAQ futures versus the Qs, the NASDAQ 100. All right, so now with that said, does the difference between the ETF and the underlying commodity differ a lot? Does the system really differ a lot? One of the things that I'd say is no, not really. It can sometimes, based on maybe a gap, a huge gap. Maybe the high was in the overnight session and then the market sold off, and there isn't that false high in the cash market because it didn't happen overnight. There was no trade overnight, for example, in the cash market. So that might skew the pivot analysis in one market versus another. So I say if you are going to trade one product versus another, why not, before you get into trading the euro currency, the FXE or GLD or SLV or USO or a slew of host of ETFs using persons pivots or the PPS, why not double check, since the ETF is a derivative of the futures? Okay? Hopefully that made sense. I'm not giving a lesson on trading ETFs as much as I'm giving a lesson on the indicator. The person's pivots relies on, again, these three components. Think of it this way. It relies on these three components: high, low, close, right? If it depends on the high, the low, the close. If a high happens at 2 o'clock in the morning Eastern Standard Time, but the FXE doesn't open until 9:30 in the morning, and if the FXE gapped, if the market gaps higher in the euro at night or in the European session and trades all the way back down like the trade never happened, well, in the futures, the trade happened, and so you have a different valuation of a high. But in the cash market, that high never existed. So since the calculations depend on high, low, close, now I hope it's crystal clear. That's why we want to pay attention to both the underlying derivative product as well as the instrument in the cash, or excuse me, the securities market. So for like the exchange traded fund market. So if you, for example, we take a look at the SPDRs, right? And we look at the ES, we might get bigger ranges because it trades overnight. And then again, we might get a more clearer picture looking at the futures, even though you could be only wanting and needing to trade equities or equity-based ETFs. Take your cue from looking at the futures. Now, ironically, coming into this week, something that we actually covered in the room, and we came in on Monday's planning and scanning, and I said, gee, Monday had a daily bullish bias, and I'll share that with you in a second. Tuesday, before I got on a plane to go to the Long Island Stock Traders Group, I even said, guys, we have a bullish day, 2 bullish days for persons pivots based on daily, but we have a bearish weekly outlook. We have a blue below gold. So that could mean that maybe the market gets up near resistance. We got Fed day, watch out. We have a weekly bearish day, a weekly bearish outlook. Persons pivots was actually giving the right target outlook for the S&Ps. How did that measure up for the cash market or the SPDRs? Well, it happened to match up anyway in this example. But in the current market environment, it did stand the test of time. We had blue below the gold. Sorry for that wiggly. I hit the wrong drawing tool. I'll try that again. Blue, oops, no drawing tool. Try it again. Blue was below gold. Well, I've gotten rid of my drawing tool. All right. Well, maybe I should use the drawing tool less. Maybe that's what. Maybe that's the message. All right. So, what does the spider show us? Well, it showed us this is an interesting concept. Now, this is where Thinkorswim, again, Thinkorswim is a little bit different because remember, they don't have the gold line. They only give you the blue line, a red line, and one green line. And in this case, note that we had the prior week had a high. This week we had a higher high, but we also had a lower green than the prior. Does everyone see that? It shows like an expanded range. It shows, can everyone see this? What I'm defining, because this is also something that we've gone over many times before, and I want, before you use the system, to understand the first thing you want to look at is the blue gold relationship, because sometimes note that the prior week we had a pretty wild range. We had a pretty wild range last week, and what this is signifying based on last week's high, low, and close, basically it's signifying that the market is still bearish. We still have a blue gold relationship that's saying the market's going to go down. And you say, but John, it faked me out. I had a higher high. And I tell you, yeah, but it also had a lower low. What it was telling us was that the market could have an expanded range. Also, this might be a little advanced for you, but it's a pickup based on the weight of the valuation of the range and where the market closed in relationship to that range. All right? So if you take a look at last week, I mean, this is Thursday, Wednesday, Tuesday, and then again, this would be Monday. Did I count that right? Thursday, Wednesday, Tuesday, Monday. So this was Friday, Thursday, Wednesday, Tuesday, Monday. So I am right. So this was the range that we saw last week. So looking at the valuation, if you looked at the market that went down and came all the way back up to this level, to the naked eye, it's like, hey, the market's kind of recovering and the market looks pretty good. Yes, we're in a daily PPS mode, but person's pivot said, wait a minute, guys, wait a minute, this could be a sucker's play. Be careful, cautious. The market's still got a blue below gold valuation. It's in conflict. Something's up. Be careful. Watch out. So the market actually did give us, the indicator gave us early warning that we still need to be a little defensive. And again, what happened? Market came off the highs, started to close below the pivot values, and then today, today was today. So look what we've done. Another way to look at this real quickly, if the market's bearish, if it's giving you, sometimes it might give you a false sense of identification by giving you a lower low but a higher high. How many resistance were in this particular bar? There's 2 red. How many greens are there? Just 1. So if there's 2 reds, it's giving you the flexibility of identifying it's a bullish outlook. Okay, even though it gave an expansion in the range, it did give us a higher predicted high than the prior time frame, and it did give us a lower predicted low than the preceding time frame. So, but blue was above gold. So in this example, it said, hey guys, the market's not quite bearish, but here's what the targeted low might be, and it's still fairly bullish. And it did not go up to R2, it only went to R1. So the system did work even in this week. We paid attention to where are we on the weekly pivot analysis. And where are we, not just what I want you to focus in on, where are we with the blue gold relationship, But then if the blue-gold relationship is giving a bullish outlook and the market falls to support, pay attention. If we have a blue below gold and it's bearish and we get near resistance, pay attention. So those are very keen observations that are going to, as we say, PMA, and it doesn't stand for protect my assets. It kind of says protect my assets. We'll leave it at that. So this is a very powerful tool not to be overlooked. I often have, and I have lately revisited reteaching the power of the pivot analysis because it's the most overlooked tool there is, and it's the one that I personally look at the most. I don't focus on selling the high or buying the low. If you've ever been in the trading room, many times you will hear me say, hey guys, many of you may have even heard me say this, if on an intraday basis, if the market's trading below the pivot, I want to wait for like what we call a trilogy setup, a setup that we give in our mentoring classes. I look for the market to get above a prior high and above the pivot, and I look for buy setups. If the market's bearish, I can look for the rally, or I look for a breakdown below the pivot. So I'm actually looking at that for day trading. I'm actually looking at that combination. Let me share with you what I was referring to earlier, and you'll see this. All right, so let's go back and formulate. Now what we're looking at here is this is, again, a daily chart, or excuse me, a 60-minute chart with daily pivots, okay? So we're focusing on now a daily chart with the pivots. So we come in Monday. So this is Friday, and this is Monday. And look what we have. Blue is above gold. And the market traded down to support and took off. Okay? Look what we had for Tuesday. Blue is above gold. My comment before I got on a plane was, guys, we have 2 days that are bullish outlooks, Monday and Tuesday, but we're in a weekly, a higher degree time frame bearish environment. So that doesn't mean to say we can't get up to maybe pivot resistance. And all of a sudden, we tried, and it couldn't do it. And then you came in on Wednesday, and you still had a bullish day. Blue was above, hard to see, but here it is. Can you see it? Follow it with me? Blue is above gold. So if it's a bullish day and the market comes down to support, here's how I trade this. This is what I look for, all right? First and foremost, I will look to be a buyer of support on a trigger. What's a trigger? A trigger is a high closed doji. Actually, we did a perfect trade last week. It was right off support, a high closed doji, and the market zinged straight up. If I don't get a trigger, so look what happened Wednesday, okay? So if I'm not mistaken, we have the 16th, we have 17th, excuse me, the 17th Monday. This is calculated the 16th. The market opened Sunday night. By the way, this is important if you are day trading. My pivots are calculated at the end of Friday for Monday session. When does Monday session start for the E-minis? Sunday night. So Monday session really starts Sunday night. All right? So that's where we're looking at. So this is Monday, this is Tuesday, and lo and behold, Wednesday, the FOMC meeting. So what I would look for, and this is maybe more teaching than you need, but I'm looking for a market if blue is above gold. If blue is above gold, once again, that's a bullish day. How do we know it's bullish? Because it's giving me R2 and R1. It's giving me two reds, but it's giving me the highlighted red, which signifies if the market's truly bullish, it should be R2, S1. What am I looking for? The market pulls back to support. What am I looking for? I'm looking for a buy signal. Or I'm looking for, if the market doesn't quite give me a buy signal, hits pivot resistance, trades back down, I'm looking to take a breakout back above pivot, because if the market's truly bullish, the market should get above pivot and test what? It should go up to resistance. So as you can see, on Wednesday, of course, the FOMC and the market just kind of traded down. We had a wild move. Even after Wednesday's analysis, we never crossed, or the FOMC, we never crossed back above the daily pivot. So remember this slide. So when does a bearish day work, and when does a bullish day work? And more importantly, when and how do you recognize that they're going to fail? Remember the PowerPoint slide that I had up. It said on a bullish day, then if the market is truly bullish, the pivot should act as support. If the market's bearish, the market won't get through that blue line. And on Wednesday, that's exactly what happened. Now, most people don't like to day trade in front of the FOMC. It's generally not a good thing to do. But what happened is after, now look at this, after Friday's price action, and even today in the trading room, we were not looking at bullish setups whatsoever. In fact, we were more looking at the long and managing trades that we had in long GLD. We still had some Q puts on in Q put spreads. So we weren't quite watching the day trade to the downside. Some people were in the afternoon, but my job in the morning, we were focused on a lot of equity trades like Tesla, bearishness in Tesla, and other setups. But I want you to look at this. Without me being around, listen and watch and observe. We are in a weekly bearish mode, and all of a sudden, yesterday's close, blue went below gold. The market flipped in a daily sync with the weekly time frame. And ladies and gentlemen, anyone that was caught trying to buy support today got caught with their pants down. Because in the last final hour, that got a little ugly for the bears, for the bulls. Ugly for the bulls. Pretty for the bears, ugly for the bulls. But the system itself, I don't know if you find how amazing and powerful this tool really is. If you can fight your instinct to say the market can't go any lower. The market, it just can't go any lower. What is the outlook? Well, the daily's saying it's now bearish, and it's in sync with the weekly saying it's bearish. So instead of just paying attention to the daily support, it behooves us to pay attention when we're trading at looking at the next highest degree time frame, the weekly support. All right? So the person's pivots, one of the big questions that we had was to define what the heck is on your screen and why is it important. And that's why, guys, ladies and gentlemen, that's what this radar package is all about. It's telling us that on a weekly basis, all right, on a weekly basis, spiders, look, SPY, you have it on your list for your weekly. The session weekly was already giving us, it's right there in red. It's like that Excel spreadsheet. It's sitting right there in front of us. Bearish. So we look for, if the market goes into sync, we start to flip from bull to bear on a daily basis to a weekly basis. That's what this is all about right in here. So this quadrant where it says the JP Advanced Trading System Lifetime, JP RS Person Weekly Pivot, what that represents is it tells us, number one, emphatically, what is the session for this week starting Monday the 17th. Oh, the weekly pivot point analysis is bearish. That must mean immediately blue is under gold. If that's the case, then the support is 203 and the resistance is 211.60. Okay? That's what that would represent. So let's validate that together. All right? What did I just say? 211.60 should be resistance. 211.60 is resistance. So here we're going to validate it. Look at your screen on the chart. Right there, it says it's giving us what the value is right there, 211.60. Check. This is telling us that that is the pivot resistance for the week, the weekly pivot resistance. What do you think the support is? Well, the green line says 203.17. Wow, 203.17. So we have the pivot resistance, which is the R2, and of course the pivot support, which is S1. Bearish outlook is R1, S2. I repeat, bearish market outlook, R1, S2. Bearish outlook, R1, S2. That's the red line, that's the green line, pivot points blue. And it matches up perfectly. So the system works. So all it is you have in front of you what the market condition is slated for the week in advance. And you have it for all of the top sectors. You have it for all the subsectors and the stocks within that sector. So when we run scans and we populate on the scanning feature, once again, when you run a scan and you say, gee, how many buy or sell signals do I get? How many LCDs or high closed dojis or low closed dojis do I get, right? When we do that type of analysis, then I can, I obviously, look, I have the reds and the greens on the chart, right? I have on the daily, the weekly, and the monthly. So it's always in front of me, and I can run the scan. I say, wow, that looks pretty powerful. And I can come over here, and I can go, well, if the market truly is bearish, and we're bearish on the week for Exxon, and it's still giving me a bearish week, if I get a daily sell signal and I'm looking at a bearish weekly target, this is Exxon, I'm just curious, I don't mean to waste your time, but I'm just kind of curious myself, so if in fact, here is a kind of a really neat thing, if you're trading futures, whether you're trading options, gee, I've got a bearish outlook and it's targeting this to be the potential range, and you can clearly see where we have blue was below gold for Exxon even. Now the PPS didn't generate a sell signal to yesterday, but the fact is that the market is in a buy signal and it just lingers sideways. It's still giving us a target to the downside. So what is that target? In fact, today we kind of surpassed that target. I want to just go over, and then I'm going to go down the list for more selfish reasons and look at Tesla. Now, ironically, Tesla's one that we're stalking in our room. We're actually, folks should be in put options from this, from our trading room on multiple, for multiple reasons and setups and signals. The irony is that for Tesla this week, right, it was in a weekly sell. It came back to the weekly MAs early in the week, right, and it still was giving the weekly MAs early in the week, right, and it still was giving Tesla a bearish, as you can see, a bearish outlook. Now, if this market gets anywhere close to support 226, and I pray it happens tomorrow, I will be so far out of my puts, it'll be ridiculous. But needless to say, we are in a weekly sell, all right? We are in a now confirmed daily sell, and we have divergence with volume. We have all kinds of really nice stuff going that says not to be long this stock. I'm just looking at things from a selfish perspective, by the way. So in this case, though, the price gave us a lower high and a higher low, right? So let's look at this, because this is, I want to teach you how it works, and I think you'll figure out how it works. Let's figure out when it doesn't work so it doesn't confuse you and you say, oh, I give up on this. So I always like to say, hey, listen, you know, we know it's good. Let me show you how to make it better, because when it doesn't work, now you know how to defend against it, right? So you're only as good as they say, the weakest link in your chain. So, or you're only as strong as the weakest link in your chain. So let's examine this. And this is kind of key critical. You know, we just went over this, that here's the gold line, there's the blue line. So even though the market closed here, it gave us next week. It did give us a lower predicted red. We had lower predicted red. So what does that mean? What's on your screen? The gold right there, 3-period pivot point moving average. Blue is the pivot point. The red is the targeted resistance. Okay? This green, it would be S1. The highlighted green is S2. Note that what it's done, it did it one more time, silly little machine. This is showing a higher low for the current week, but yet it showed a lower high. It showed us maybe what we would consider an inside range, but the technicals are saying it's still bearish, even with the rally, even with the high close doji. And yes, you could have gotten a nice trade off of, even for the last few days, for the upside for a high close doji. You should have used extreme caution with that trade, because the weekly pivots was still demonstrating a lower high, lower low. Well, how strong do you think this rally might be? I mean, I got a high close doji. It's off weekly support. There's the doji. There's the orange. It gave me a PPS. I got convergence on my momentum. I got good volume. I'm going to get long. Great. You got long at 249, or excuse me, 242. Geez, the stock went to 260 and change. I mean, no offense. That's not a bad trade in 3 days. Whoa. But the weekly didn't change to bullish. And as the market rallied, this is how I'm thinking. This is how I'm using this. The weekly pivot, the 3-period pivot point right here, is above the blue. That's not bullish. And all of a sudden, the volume on the rally, we start to get into what? From a technical perspective, it's a questionable situation. Yes, we had a nice rise, a counter trend move to the upside, but I'm starting to get into question. So now you got a daily sell signal, and if you're still long, we're in sync with a daily sell when the market's giving a weekly bearish bias. And oh, and by the way, the weekly was in a sell mode. All it did was snap up to weekly MAs. So the weekly PPS is in a sell mode, and the weekly person's pivot was bearish. The volume, by the way, on a weekly chart, the volume on the weekly chart is obviously a concern, more like a little bit of what? Topping action. So using the pivots and what's defined on your charts is very powerful. In fact, how I put this out, many of you, if you're in the trading room, I put this out every week, and I want to share this with you. I start this thing on Sunday. I started it a little late this week at 11 in the morning. I finished it at 8 o'clock at night. Okay? Just to give you what I do, how do I use what I'm teaching you? More importantly, if I was sitting where you're at, do I use it at all? Well, I must, because take a look. First off, we put out our market identification. We talk about financials are looking good, but stocks in the BD, the XBD, the broker-dealer, look either top-heavy, which is an understatement now, or form bearish divergence. Names like Legg Mason, Charles Schwab, Goldman Sachs, JP Morgan, and Ben Franklin. Watch these names for short option trades, blah, blah, blah. Next, gold. By the way, gang, we got a weekly high close doji. We talked about that in the trading room Thursday. I did it for TradeStation Thursday. I think you and I in this room together, we went through a major analysis about gold with the small specs being short. How's that for a little squeeze play to the upside? We also talked about the Japanese yen, which gave us a bullish close yesterday above 80.81. Had a little upside day trade today in the yen. The euro currency, weekly high close doji. Everyone's scratching their head going, look, the dollar's weak. Well, we had a high close doji in the euro currency combined with a PBS buy signal. Soybeans, in case you trade commodities. Coffee, in case you trade commodities. We have our seasonal spreads. The seasonal spread trades. You buy gold. This is in 25 years, by the way. I use every month I put out seasonal spreads in commodities that have an 80% accuracy or probability of profits over the last 25 years. Okay? So I do a little bit of intensive analysis. So there's something in this newsletter for everyone. But here, if you're a stock trader, here's what's in it for you. I put out bullish stocks which had weekly high close dojis that I saw that were in seasonally strong period of time, had many different factors going for them. We had REITs, we had ADP, which proved to be by Monday's opening, by Monday's close, that stock was up 2%. Nice little trade there. Bearish stocks. Look at these names. WBA, GoPro. Baby, we rang the register on GoPro. That was a beautiful short, by the way. Charles Schwab, Reynolds, and Ryder. I should have said the entire market, but another thing that we put out was watch for CMG. Seasonal volume analysis is negative. And that all comes from this stuff. Right here, this machine, this stuff right here. Okay? By the way, I wanted to look at CMG selfishly together with you guys. So CMG, when I talked about the volume divergence, big run up in the market, big run up in the market with no volume behind it. That combination is very scary over the long haul, Now you got to admit, it held up pretty well today, relatively speaking. But the last time we've been talking about IBB, trying to move up as well, bearish, and this is something that is just older than dirt for me to talk about. Bearish divergence on the volume, bearish divergence on the histogram. We've been talking about it because it's already been written. It was generated a weekly PPS sell signal, That was 2 weeks ago. How do we put it together? Let's look IBB, shall we? Ironically, look at this. I just showed you the weekly sell signal. I'm on a daily chart. Blue was below gold. Blue was below gold. And blue is below gold. So all that happened is you also generated a daily low close doji. I mean, there's no reason to be buying. More importantly, I guess we could get basic and say, besides looking at the pivots on a weekly basis, hopefully tonight's session really drills home the importance of this. and how to utilize this tool, but also the PPS indicator, the moving averages are pointing down. The histogram is pointing down. And the volume is pointing down. So when they talk about, gee, I wonder if this market's got strength, there really was nothing positive behind the IBB, okay? And it came about by looking at this combination. Blue is below gold. Blue is below gold. All right? So I think we really did cover in detail more about the relationship of the blue and gold. I defined what the horizontal bars between the pivot S1, S2, R1, R2, the pivot point moving average. I didn't want to get into the whole story, but I thought actually in discussing with Jeff, he suggested, hey, show them. Of course, the high and low close dojis already defined for you. It's pretty apparent that when you get the market closes below the doji, you get a low close doji. When the market, like GLD, which we warned about in advance last Thursday night, which we talked about, if it closes above the highs of these dojis, it will generate a flash of a high close doji, and it turns the chart orange. Orange is good. Maroon, if you're long, orange above doji, good. If you're short, maroon below doji, good. Okay, so let me repeat that. If you're short the market and you get one of these setups, that's good. If you're looking to go long the market and you get one of these setups, that's good too. Okay, so there's your low close doji. Here's a high close doji. Interesting, the low close doji at a pivot resistance. The high close doji came after it tried to get off the support. So we have lots of questions over the last conditional change candle, and that I think is in a subject matter all by itself, but needless to say, as what is defined right now on this weekly chart, I'm going to switch to daily. I want to take everything off, format analysis technique, and let me take off the pivots. Okay, so now we're just stuck with what? Price and PPS. Okay, so what do we have? We have the last conditional change. So the day this market made a upside movement, this market gave a last conditional change. This is what we call bullish. So note that for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 painful days, the market actually stayed contained above the white line, right? So then finally you get a buy signal. And you say, well, where should I put my stop? Well, initially your stop would go below that white line. And then all of a sudden you got follow through the next day. And you go, okay, so there's the next day. If you bought on the close when you got that buy signal, or you bought on the open, or you bought a pullback somewhere in that zone right there, or you bought yourself a call option, all right, and you noted, why would I do that? Well, we started to see bullish convergence on the indicator with the person histogram. We started to see volume accumulate in the trade, and we got a PPS buy signal, and I have a defined risk. If the market, after this whole time's gone down, we've got sideways action. We talked about specs being short this market. This thing's due for a pop, right? Okay, great. Where do I put my stop loss order? My stop loss order goes below this white line. My stop loss then trails above the new last conditional change. My stop loss would go above the next last conditional change, and now you have until we're going to have a new one plopped on the chart for tomorrow. It'll be right above this level. So we get to trail stops. Now this is an ETF. This is GLD. What did I say? If you're going to be looking at the market, while it is a very effective, the white lines are the bullish, meaning if you're long, your sell stops go below the white line. What does it mean? The market needs to close below the white line typically, and I like to teach not just the white line, but both of the moving average. It's okay to see a market sometimes, like for example, in an uptrend, sometimes the market will trade down below the moving average, but then pop and close back above them. So I don't like to keep stops, especially on position trades, you know, right there, but I like to look at keeping them out of harm's way, and that's what the last conditional change does extremely effectively, okay? Immensely, enormous. Don't have any other ways of saying it. Now, let's take a look at gold. Oh, wow. Yeah, because there's no gaps, it looks slightly different. Look at the difference between gold. What happened to that big candle for the last 17 days? Where did it go? It's not on the gold chart, but it is in GLD. What happened? See the difference? We got a difference in candle patterns. This day was July 24th. Incidentally, I'm not sure what happened on July 24th, but July 24th, by the way, July 24th is paramount to the equity markets, is an incredibly important day, which occurred as another last conditional change, July 24th. Write that date down. I'm going to show you the S&Ps in just a second. But July 24th, July 24th in the futures was kind of like a high wave candle, and it actually formed a little what looks like a low close doji, right? But if you understand the low close doji, that's just a market close below a doji. A low close doji is after an uptrend, not after a downtrend, right? So that's not a sell setup. That's just a doji and a market close. But on that day, July 24th, gold futures, because they were traded 24 hours, didn't have a tall green day. Aha. But needless to say, the market just pulled sideways all the time. Last conditional change, last conditional change. Look at this last conditional change. From when we got a buy signal, we start seeing last conditional changes. Now you got a last conditional change that occurred here. We'll get another one for tomorrow. All right. So that would allow you to want to trail your stops unless you have an objective, a profit objective to get out. White lines are where you place your sell stops when bullish. Gray lines are where you place your buy stops when bearish. Okay? We also utilize, and let me share with you the S&P real quick. And I'm going to share with you July 24th. This is July 24th. I know it because there's a gray line. And the market, ironically, and we've been talking about this line in the sand in our trading room for this entire time. The market never once, not once, looked like it may have, but not once did the market close over that last conditional change in the S&Ps. And it also exists in the NQ. We can look at the Qs, for example. Oh, come on. $7.24. This day right there, the market never closed above the 724 high. I don't know what was there, but that's the last conditional change candle. Looking at the spiders. Looking at IWM. 724, there was something big that happened, and it doesn't matter, but it's ironic, the coincidence that we get, that 724 right there. See the gray line, and it just extends out. The market never closed above that last conditional change candle. Why are they important? Well, they're very important because sometimes what happens is the market gets up to that level and it acts as a resistance. Okay, so the markets go down and then they come up, and then the last conditional change candle's high, the high of that last conditional change candle, will act as resistance. Just one more confirming area to trade against the markets. Here's the last conditional change candle right there. Can you spot it? You see it? And you see the gray line extended out? Look what the market did. Just like here, the market went down, it came back and tested the high of that last conditional change breakdown candle. Okay? So that was bullet points that we wanted to cover tonight. Again, defining the horizontal bars, the relationship. Again, I can't stress the power of the blue-gold relationship, especially on weekly time frames, and then more importantly in this market. Back in May, what we were doing when we were more aggressively looking at long positions in stocks, we were putting buy recommendations out on stocks that were in seasonally strong period of time that had good buy setups, and looking for buy entries near the weekly pivot point, the green level, all right, the support, and then using defined risk. So we were saying if these particular stocks got up to or down to those levels, we'd look to be a buyer, and it was incredibly effective for swing trading. So it is in that sense for tonight's lesson in the PUG Group. This, we covered an enormous amount of material that I think is going to dramatically improve not only, I think, your trading, the way you see this, but also the way you use the material. The gray line is simply the top of the bearish last conditional change. So if you go short, your stop goes above that gray line. All right, and there it is. Guys, that does conclude tonight's session. We'll be back next Thursday with another PUG Group. A lot of the material that we covered tonight, we do in our daily trading room, day in and day out. With that said, I know some of you guys have been in, some of you guys can't be there, but it's great to have everyone back. Don't forget, how do we utilize what is in front of you? And, you know, don't take it for granted. It's extremely powerful information. The best thing is it tells you in advance. It's not after the fact information, okay? It gives it to you before. It's up to you to act on the information. It's much better to act on information than react afterwards. It's kind of like the news. You know, they don't tell you what is about to happen. They only report, oh, look what happened today. I mean, how many people are in the last 3 weeks have warned about the potential sell-off, or, hey, we're bearish IBB, guys. We got a defined sell signal. We didn't start to hear about bearishness in IBB until maybe Thursday last week, maybe definitely Monday. And as you can tell, it's already been kind of starting to reverse. Anyway, guys, thank you so much, and I hope you found tonight's very informative. Piers, thank you very much, my friend, and we will see everyone next week. Have a great evening. Thank you.